Hey everyone, and welcome to the PivotBoss Closing Report for March 7th, 2016. I am Frank Ochoa, aka PivotBoss, with analysis after the recent session. Today's ES shows that we've basically traded an inside day formation here, where the current session's range fell inside the previous Friday range, and basically prices are kind of at a holding pattern right now. You can see that initially bulls defended the top of the weekly pivot range here. We've been in an uptrending market. Higher value week over week. Every pullback to the pivot range has been a buying opportunity for the most part, as price has continued to push higher. One thing I find very interesting here is how price has pushed cleanly through the 1939 half key level and has surged into the upper 25% key level at 2007. That is a very important level there, that after being reached, any pullbacks, even as low as the 1939 half, could be an area to defend for a continuation perhaps into that 2075 level, which is the top of the key range that we've been following since the beginning of the year. So right now we've seen a very solid continuation. Remember, failure to get below this 1804 suggested a move back to the midpoint of the range, with the potential to see a continuation back toward the top of the range and reach this HVN. So that could be just around the corner here if another pullback is defended and we see another squeeze. So that's very much what happened here recently, where we had a 2-day pullback here. That led to a squeeze. Before that, it was a 1-day pullback, led to a squeeze. Before that, another 2-day pullback and a squeeze. So what we're looking for is how much, if at all, do we see a pullback? Below 1981 half here would suggest a push likely into the bottom of the pivot range, so we could get even as low as 64s and then see a continuation into 2048 and perhaps beyond. Otherwise, below that, you likely target the 1939 level, and at this point, you also have the primary bear target at the same level. So right now, we have to see which way we break out of this range. If we break to the downside, be cautious of any failed breakouts that lead to a slingshot move in the opposite direction. So let's take a look at the intraday time frame. On an intraday basis, you can see how prices have coiled up significantly here over the last couple of sessions. All of this energy right here will likely manifest itself into a solid expansion phase, but you have to wait for expansion. You have to wait for the breakout. If you believe the breakout's going to be to the upside, it would be prudent to look for pullbacks to buy on the opposite end of the range for a shot at breaking through the top and continuing higher. So again, any pullbacks into 91 half or perhaps as low as 68s could be an opportunity to buy on a swing basis for a continuation. If price just pushes straight through those 07 highs, then look for a continuation into the next upside targets. And right now we have a primary weekly bull target here, which is just above, and that's going to be at the 2048 level. So if the low is in for the week, which may not be the case yet, but if it is in for the week, then we'd be looking at a move into 2048 ahead. So that's very, very much in play. Now, obviously, we began the week with thoughts that the ES could see some sort of trading range because of how much movement we saw throughout the last week, and then that wider pivot range. So we could be looking at more trading range action before we see a follow through. But overall, we have some key levels to play from. The crude oil here, this has been significant. This is typical of what happens when you see a short squeeze come in, right? And that's when price was hanging up here for 1, 2, 3.5 sessions where it was testing 35s but not really getting any traction. But at the same time, many bears were coming in to defend those 35s. Eventually, those bears got squeezed through 35 and you saw a major push into 36s. The same happened again where we saw a continuation and a squeeze into 38s. This has been a major, major squeeze ahead, unlike anything we've seen beyond previous highs, and this is significant. So I would say any pullback now offers an opportunity for bulls to defend for a shot at seeing a continuation into 40 half. If you recall before, very similar to the ES, when price closed below its key range, in this forward contract it shows a double bottom, but before, when price closed below that key range and then popped back above it, the expectation was these late shorts got trapped, and that would lead to a move to 34.63 with a shot at seeing a full-on continuation into 40 half. We've seen that pretty much play out like almost flawlessly, and this has been phenomenal, especially the last 2 days where we've seen some significant range on a 2-day basis. Matter of fact, this might be the biggest rally on a 2-day basis since late January when we bounced off those lows and had a 2-day rally basically from 29 halves up to about 33 halves. So it's been a big time move overall over the last couple of sessions. Anytime you move with that much force, usually you see a period of digestion. If this is the case, as price pushed through our 37s here, the expectation would be that any pullback into 37 is likely to be defended, and you could see a range develop between 37 and 38 ahead of the next move. Looking at the intraday time frame for crude oil, you can see how significant this rally has been. Just a full-on continuation to the upside. Price pushed through the 25% weekly key level, that PivotBoss pivot there at 37.27. That could be an area to defend upon a pullback. As low as 37 and 37.27 in that zone could be an area to defend by bulls for a shot at seeing a continuation into the next upside key level, which is going to be 39.25 to 39.35, which is the primary weekly bull target. So right now, any pullbacks could be seen as a buying opportunity as deep as 37s and as shallow as 27s, and that could offer an opportunity to fade and push in the opposite direction toward this target by the end of the week. Let's take a look at gold here. Gold continues to push and hold above the 1263.90 key level, which is the top of the range here, the top of the impulse range. This is very important. Obviously, if prices can continue to hold above this zone, the expectation, remember, was to reach 1282 and 1300.1, the next two upside key targets. We barely reached the first one. We came within 13 ticks of reaching the first one, and then we pulled back a little bit, forming an inside day range. So this inside pattern here could break in either direction. Given the current upside trending market here, if we push to the downside, look for any false breakout for a shot at slingshotting this thing into the opposite end, which could put us into 1294 to 1300 by the end of the week. Any failure right now to establish acceptance above the previous week's close, which is currently being defended here, any failure to establish itself above those 1270s, 1271s could lead to a pullback as deep as composite VPOC at 1233.30. Any move of that magnitude likely to be defended for another potential shot at new highs, as this commodity has been very bullish lately. Taking a look at the NQ, this one here, we've seen this kind of play out recently, but I talked about this in the trading room, how narrow this 3-day range was here, and we're looking for some sort of expansion from this range. However, I mentioned if the break happens to the downside, watch out here, because any failed breakdown could lead to a push into the next HV and above. Very similar to what we saw before. When I talked about this narrow 4-day range, prices failed to see any acceptance below that bottom of that range and saw a move in the opposite direction. I mentioned that is likely a cue for continued strength in that direction, and that's what we saw to new highs here. So this is very similar right now, failing to hold below 4,300s basically, below the bottom of that key range. All of that rejection right there, those late bears got trapped. We saw price push back up. And right now, if bulls can continue to defend the bottom of the pivot range at 42.69, or even the pivot point for the week, 42.86, this could allow for bulls to come in and squeeze bears into the next HV and above, which is going to be 4400 to 4410. As a matter of fact, if we bring up our weekly PivotBoss pivots here, which you'll see, the next upside key target on a weekly basis is going to be 4402, which is the 25% key level. Right now, you can see this is the midpoint of the previous week's range at 42.69, well defended today. That leads to a high probability opportunity of slingshotting into 4,200, 4,400 rather. Now taking a look at the intraday time frame, lastly, this one's important here because again, this kind of shows the intraday play of how it played out. But overall, we had mostly traded within the key range from the previous week's trading range, and then price attempted to hold below initially, came back and rallied back to 5-day VPOC. That was taken offered to new lows into the bottom of the pivot range, and from there a major short squeeze ensued into the close, closing back above the 42.93s. That's important. If price can continue to be defended between 86 and 93s, that could offer an opportunity for bulls to defend again for a retest of value at 43.22, followed by the continuation into 43.55. Any push beyond 43.55 opens up 4,400 ahead. All right, that's it for now. Let's see how this thing plays out heading into Tuesday's trading. Good luck and trade well.